Gold blasted to $3,327 per ounce, a record-smashing peak that had traders buzzing and portfolios gleaming. This wasn't a quiet climb. It was a full-on sprint ignited by tariff fears, a crumbling US dollar, and a market desperate for something solid to cling to. For anyone watching the charts, this was the moment gold went from being a hedge to a headline, dragging mining stocks along for the wild ride. The surge wasn't just about gold. It was a neon sign flashing economic unease. A weakening dollar fueled the rally with while tariff talk had investors piling into the yellow metal as a shield. Mining stocks like HMU and AU didn't just ride the wave, they amplified it, offering traders a turbocharged way to cash in. For now, gold's the king of the hill, but any shift in trade tensions or a dollar bounce could dim its dazzle. Until then, it's the star every trader is watching. Gold is at 3,000, Peter. And I'm going to give you 19 guesses as to who is thrilled by it.
Oh, my namesake, Peter Schiff.
Peter Schiff. Look, I like to dunk on Peter Schiff, not because I don't think he's right, but because I think obviously broken clocks. When he started talking about the doomsday after the global financial crisis, saying that it's not over, yeah, I believe it. It's not over. Of course, it's not over, but it took almost 20 years for the big hammer to fall. Now, I know what Schiff would say is that the dollar has continued to fall in purchasing power, and that and some people would call the period that we are in right now the silent depression, because if you calculated unemployment rate the way they did before, unemployment rate might actually be around 29%, while in the Great Depression it was 25%. But these are all details, Peter. Stock market up and to the right. Good. Good stuff.
Yeah, but gold it's not a play for making a ton of money. It's a store of value.
Store of value, exactly.
So in terms of store of value, it's doing phenomenal.
Well, I don't know if it's doing phenomenal. It's only at 3,000. I was expecting...
Is that 2,000?
Do you know how many people called for gold 5,000 3 years ago? Biggest inflation push we've ever seen. The sky is falling. All the stuff these people have been talking about. If it goes to 5,000, that's my low end of the range is 5,000. How many times I heard that? We're at 3,000 and inching.
Okay, yeah, but people say Bitcoin is going to be at $1 million. It's up now. We're happy with where it's at. Doesn't have to be at the expectation level for it to be performing very well. $3,327.01 an ounce. Come on.
There have been one of these days. I think Mike will talk more about these, but he's shown me stocks that have gone up 300, 400, 500% in like 3 months.
How are you supposed to find those?
He finds them. Mike finds these stocks.
Do the research like Mike does.
Well, you ask Peter Schiff, hey buddy, which mining stocks should I buy? What do you think he tells you? You think he tells you the mining stocks he buys? No. So it's the same sort of deal. At least the Bitcoiners tell you what to buy. Buy Bitcoin. But the point of the story here is I think we should give Peter Schiff his due because he was right. Gold is up. So let's see what he has to say.
Investment account is in gold and gold miners. That was up from 50%, I guess, before the tariffs.
Right. That's not physical gold. That's just my stock portfolio.
Yeah, miners.
And I had generally tried to keep it around 50% gold stocks. But the markets have moved in the favor of mining stocks recently, and so that's taken me up above 60%. But I'm not paring back any of these positions because I believe we're about to see a spectacular rise in gold stocks. And the reason for that is that when gold hit 2,000 early last year, nobody even believed that it was going to go any higher. And you had a lot of firms downgrading the gold mining stocks because they thought gold had peaked. And the entire time gold rallied from 2,000 to 3,000, investors just expected the metal to fall. And so nobody was buying the miners, and nobody was even buying gold as an investor. It was all foreign central banks.